welcome to video 2 of my 5-part first-time homebuyer series. So in video 2, we're going to talk about getting a loan and getting an agent. First, let's go over the different types of loans. So all of this is going to be based on your credit score, your income, your debt-to-income ratio, and things like that. Now there's 3 main types of loans out there. There's FHA, conventional, and VA. An FHA loan is typically what first-time homebuyers use. These loans are backed by Fannie Mae and Freddie Mac, which are institutions basically backed by the government securing loans for mainly first-time homebuyers. They're typically a little easier to get, not as much qualification is needed, and with that 3.5% down payment, it's a lot easier for first-time buyers to come up with 3.5% down rather than about 10 to 20% down. Now, a conventional loan actually has a minimum of 3% down. Now, in order to get that 3% down, you're going to need a pretty good credit score. Last time I remember checking, it was about a 720 FICO is what you'll need to qualify for a 3% down conventional. With conventional loans, those are backed by private institutions, not getting government money. Private people put out their private money so that mortgage brokers and credit unions, they can go through them to secure a mortgage. VA, this is for our veterans out there. If you've served in the military, either active duty or served your time and got an honorable discharge, you can qualify for a VA loan, meaning you can put 0% down with no purchase price limits. In theory, you could go buy a $20 million home and put no money down on it. The less money you put down, the more money you have to pay off in that same amount of time. Instead of putting that $10,000 down, you hold on to it, you're going to pay off that $10,000 over the term of 30 years, 15 years, whatever you might have, and you're paying interest on it. Now, for down payment assistance, which you will see once you start looking at homes, written as DPA, or down payment assistance. There's 2 different programs that people can typically qualify for, and that is CALHFA and something called the Golden State Fund. Now, the Golden State Fund, when you get that down payment assistance, you actually receive a forgivable loan. It's basically just a credit or a gift. It'll help you get that down payment secured, and then you won't have to worry about it, and it's forgiven after, I believe, 3 years. Now, with a CALHFA, which is more typically used with first-time homebuyers, a CALHFA will give you the down payment you need in order to secure the loan and close escrow. But what they will do is add on a second deed of title, basically meaning that that mortgage Now, the other down payment assistance is CALHFA, which is more common with first-time homebuyers. See, CALHFA will give you that money in order to close escrow and get the down payment on that loan, but they will put on a second deed of mortgage, a second deed on the title. When you take a mortgage, that basically becomes the first deed. The bank will own that deed. You give them a promissory note saying, I promise to pay off this money in exchange for the home. Once they fully pay off the money, I now own the home, the bank doesn't own the home. So with CALHFA, they're giving you that first mortgage, and then they're tacking on a second mortgage, basically, at whatever the down payment may be. So if you're looking at a 3.5% down, they will give you 3.5% on that down payment, but you're going to basically be paying that off as another mortgage with interest in the 30-year loan. Steps to getting a loan. First, you're going to find your lender. I highly recommend going and talking to a couple different lenders to find out who you like, whose communication style you like the best, who's the best at explaining things to you. Now, once you actually find that lender, you're going to get talking with them. The first thing you get is a pre-qualification. A pre-qualification basically just means I called the lender, said, hey, I got a 700 FICO, I make 120K a year, and I only have 10 grand in debt. What do I qualify for? And they'll say, okay, well, based on those numbers, you qualify for this purchase price, this down payment, this interest rate. That isn't checking any of your documents, isn't looking into anything or doing a credit check, but it will just give you a general idea, maybe of where you might be able to qualify at. Now, it's the pre-approval that will actually give you the interest rate and your down payment and your purchase price. This will tell you more of what you are actually approved for rather than a general, in theory, here's what you could qualify for. Now the DU approval, DU stands for Desktop Underwriter. This is the guy at the mortgage office that is double checking and doing the final check on all of those loans. He's running your numbers again, looking at your income, looking at your debt, and verifying that yes, this is a good loan to give out. This person is qualified. They will pay us back. So that is the DU approval. Once they check you out and give you the thumbs up, and you have that DU approval, then you can move forward to funding. These two things. The DU approval can come before escrow. So say you're going to write an offer and you want to show them that you've already, you've had your lender check out everything and we're good to go. We are serious about buying this place. Then you can get that DU approval before opening escrow. If you don't, it'll still need to happen during escrow. And then once you have that, then you can actually get your loan funded. Once that loan is funded, then you can go record title and follow through and get your keys to your brand new home. So getting a loan and getting an agent kind of go hand in hand. Most first-time home buyers anyways, they don't know a million different lenders. They don't know who might be the best or what type of qualities to look for even when going out and trying to find someone to work with. That's why you get yourself an agent. Getting an agent will help you, give you guidance, finding those people, knowing what to look for, and knowing the right questions to ask those people. Like I said in the first video, a lot of agents actually work with lenders that they've worked with in the past that have had great communication, are very knowledgeable in their profession, and overall give a great service to our clients. Everyone we refer you to is a reflection of our service and our service quality that we believe in. So that's why it's important on who we refer out. We heavily vet them and make sure that they are perfect. Make sure that they're the best around so that we can give you the best service possible.